Yeah, let's talk about the ETF
Okay.
flows, Kevin. You've mentioned some data off to me offline. Have they been picking up, or have they still been kind of flat?
Yeah, so in the early days of the pandemic, Q1, Q2 of 2020, we had record inflows, brought ETFs to the highest level they've ever been, and that kind of peaked with the gold price in August, and then since that period, we've had a period of a combination of mostly outflows, and that actually reversed itself in May. We saw our strongest month. I think $3.5 billion came into ETFs. Most of it from the Americas and Europe, not so much Asia.
Okay, and retail demand. Finally, we talked about physical demand just now. How significant is that? Is that on the price of gold itself?
I think it's down the list of drivers. I think gold is very much driven by the London OTC gold market. That's where the price is set. The futures market in the U.S. mirrors that on a kind of a forward basis. So really the price is set through those financial instruments, and then the physical ETFs and on the investment side, that the physical flows kind of mirror that. On the retail side, if you right now, because there's a lot of retail demand, if you go try to buy a bar coin in the U.S. or Europe, you're going to pay a healthy premium over what you see on spot on CNBC, just because there's more demand than supply on that, and there's plenty of product, there's plenty of gold and silver around the world, but I think everything we've just been through over the last year with the fabrications process has been disrupted. It's been altered to meet some more institutional demand. So there's plenty of gold and silver out there, but it's not always fabricated in the type of bar or coin that investors are looking for.
And that's an excellent point. Retail investors have noted that the real price of gold, according to them, is really the spot price plus the premium, because they're not buying bars or coins at the spot price. They're buying it at the dealer's price, which factors in the premium. And so that really is the premium component really is the most volatile component if you compare that to the price. When can we expect premiums to normalize? Will they normalize? And why? Well, generally speaking, why have they still been elevated? Because it's been a year since the start of the pandemic. Shouldn't dealers and retailers shouldn't that have already factored in their production? Shouldn't they have already acclimatized their inventory to these higher levels of demand?
Well, I think you raise good points, but I don't think we're out of the pandemic yet. I think
Okay.
there's in the U.S. we're heavily vaccinated and masks are coming off, but other areas of the world are still scrambling with high infection rates, and and that definitely affects the production side.
Okay.
Transportation is coming back. It kind of went away. It was hard to find air travel for gold, but it's not back fully, and so I think it's still expensive to ship products as well.
So would you say the higher premiums is more of a result of the logistical problems you've just cited, or because of really high retail demand?
I think it's a combination of both, and I think it will settle down. But I think that they'll come in at some point, but it may be a while. But again, there's alternatives. So like if you believe in gold or silver, you can buy gold and silver ETFs, and those trade very efficiently, very close to the spot price that you see quoted. Now some people don't have the faith in that. So if you buy futures contracts, there's no gold behind that. If you buy ETFs, there is physical gold in trusts sitting in vaults behind that. But some people are even skeptical of that. So if you want to hold, and then there's also online, like Perth has an online depository program where you can actually buy gold that they hold on your behalf. And if you buy on an unallocated basis, there's actually there's no storage fee. Basically, it's just the entry and exit cost. So there are ways to hold gold and silver without having it like delivered to your home. But some people don't the physical instrument in their possession.
True. There are many ways to invest in gold: ETFs, physicals. You've named just a few physical products. Last point, and then we'll end the conversation. You brought up some ways to invest in physical bars and coins. You mentioned the unallocated products that Perth now offer. Now, there's speculation from people on the internet that there isn't physical coins or enough physical coins and bars backing up the unallocated pools. Can you confirm or deny these speculations?
Yeah, you can actually go to the Perth Mint's website, and there's a bulletin up there that absolutely, denies those allegations. Basically, it says that there is physical bullion, gold and silver behind all of those depository programs.
Okay.
So I think there were a series of articles. There's, I think, certain press. If you were writing a story about Perth and you were going to write something like that, I think you would call me up and say, "Hey, Kevin, here's what I've heard from this. Do you guys have comments?" And I think responsible press is doing that. And so we've, but there's so many bloggers out there, and a lot of times they have commercial interest in not talking to you about it and things like that. So, but no, absolutely, those unallocated depository programs are fully backed by physical product.
Okay, so the other media and potentially bloggers, they did not contact the Perth Mint for information before reporting on their side of the story. Is that what you're saying?
Yeah, no, that's right, and we have shared some information, and actually, again, they put out on the Perth website. It was it was a strong enough allegation that we thought we had to provide information. So, but there's a full accounting of how the program works, and again, the Perth Mint is it's a government-owned entity. It's audited by one of the big four audit firms. So I think we've made a pretty strong statement back saying that no, that's not true. There is physical product behind these programs.
Okay, and just final question: how do you see physical demand, retail demand, continuing into the rest of 2021 and beyond? Can it still be as strong, or do you think it'll subside to pre-pandemic norms?
We don't see any sign of it waning. So I think it's going to continue to be strong.
Okay, fantastic, Kevin. Excellent updates. Thank you very much for coming in today.
Oh, great. Thanks, David.
And thank you for watching Kitco News. I'm David Lin.